Your lack of tax knowledge could cost you big time. We're going to go over a couple examples here today. So let's start with my man right here. This is Bill Reichenstein. Pay attention to marginal tax rates and not tax brackets. And we're going to dive into just briefly. I'll leave the link to the article. It's okay. I like what he's saying. It was okay. But anyway, I want to point out one thing here. So this is the provisional tax with a tax torpedo on Social Security. And this is just something I want to show you because no one knows this. In fact, Reichenstein didn't even know it until I think I brought it to his attention back in 2011. Let me just share what happened. I had a guy come in my office one time, a client. I was working in Center City, Philadelphia, on behalf of USA. It's 2012. And he gave us piece from his insurance guy. He goes, look, man, my insurance guy says blah, blah, blah about how Social Security's taxed. And I said, the insurance guys, I don't know what the hell they're talking about. So I kind of poo-pooed him. He goes, would you just read this for me? Because it seemed to make sense. But I'd like to be able to poke holes in it because the guy was trying to sell me an insurance product. So I grabbed the letter, the thing, and I didn't read it. I just sat there, and then a couple of days later, he emailed me. He goes, a nice guy, too. I love this guy. So he said, I can't remember his name, but he said, did you look at that? I said, no. He goes, you got to do it, man, because I need to poke some holes in this because he's going to try to sell me a big policy, and he made it sound good. So I read this article about how provisional income and Social Security was taxed, and I was like, holy crap. I had no clue. But I'm reading it from an insurance salesman. I said, this can't be. And so I emailed a number of tax people. Reichenstein was one of them. And he was nice to email me back. I said, are you familiar with how tax works on provisional income and stuff? And I said, this can't be right. It was some insurance guy telling me this can't be right. And he kind of basically said, he wasn't all that familiar with it. I wasn't either. I emailed probably 5 CPAs that's connected with on LinkedIn. One got back to me. He said, yeah, no, this guy was right. And I said, is there any other source I could look at? Keebler, I couldn't find anything for Bob Keebler. It was weird. And no one was talking about it. It was nuts. Anyway, so it was very interesting. And I still think to this day that I'm the one who got Reichenstein to think about it. He doesn't know who I am. He'll never say that. And I'm not saying he's a bad guy or anything, but this is relative how new this stuff has come to be just in the last decade. But now we know. And there's no excuse for you not to know. All right. So here, we got to take $33,000 in Social Security benefits for a single individual. And you're going to see here, the tax bracket, all right, is 10, 10, 12, 22. But because you have provisional income tax here, if you add another source, I think in this case, the other person has some other income right here. Non-Social Security income of $45,000. Non-Social Security income of $45,000, we're going to take $33,000 Social Security benefits. And what happens here is while your tax bracket is 10, 12, and 22%, your marginal tax rates are higher. In fact, look at this. Marginal tax rate is 15. It's 50% higher than your tax bracket. Marginal tax rate is 18.5, which is 85% higher than that. Marginal tax rate is 22 versus 12. 40 versus 22. 22. See what I'm saying? So that right here, this is a tax torpedo. Right. I can make that highlight. Oops, I guess I can't. Anyway, this is a tax torpedo right here from where your marginal tax rate is higher than your tax bracket. But that's not really what I want to talk about here today. So hold on just one second. So here is working with a guy today. Here's his tax estimate. And this is the effective tax rate. Effective tax rate. Here's while he's working. You can see his effective tax rate. He lives in a northeast state is well over 25%. And that's your state, that's your FICA, and that's the feds. Now he stops working. His effective tax rate drops to 7, 6. Right here's when Social Security kicks in 11. Right here's when RMDs kick in 15. All right, so here's his effective tax rate. What effective tax rate? Well, I'll show you. So effective tax rate is quite simple. This is his income, $155,000. Here's his expenses. Doesn't matter in this case, but here's his taxes. So your effective tax rate is simply you take, this is when he's 70 years old, 17,673. Divide that by 155. So his effective tax rate is 11%. So basically for every $100,000 of income, he pays $11,000. of taxes. Not so bad. So on $155,000, he's only paying $17,000 in income taxes. That's an effective tax rate of 11%. That's incredibly low. And you can see here it is right here, effective tax rate of 11%. That's 70 years old. You see that? That's his effective tax rate. But let's take a look at marginal tax rates now. Here's at 70 years old. His marginal tax rate, his federal income tax bracket is 25%. All right, so let's go back. Effective tax rate, 11. Marginal tax rate, 25. So when he's 70 years old, he's actually in a 25% tax bracket. Marginal means, or marginal tax rate, is how much taxes you pay on the next dollar of income. So for simplicity, for every $10,000 of income he makes, he will pay $2,500 in taxes, even though his effective tax rate is only 11%. He's only paid, in the past tense, $11,000 for every $100,000 of income he made. A marginal tax rate says, well, that's great. You're now in a 25% tax bracket. For every $100,000 you make going forward, you're going to pay $25,000. And the interesting thing is, look at this. His actual federal income tax rate is, well, it's 24, but it's lower. It's the same thing, 24 to 25, or 22, 24 to 25. It's lower than his is later, even though he's working. That's the thing about FICA and state tax too, man. So look at that. Right now, even though he's at the highest tax brackets, tax rates he'll ever be, from a marginal tax rate, it's actually lower. See that? 24% than what it will be in the future. Even though, going back again, look at that. His effective tax rate is much higher at 27%. I hope that makes sense because the effective tax rate, factor in state and FICA. All right, so let's keep going here because I want to show you something else. We're going to do a $100,000 Roth conversion. You ready? Check this out. All right, so let's just minimize this. We're going to minimize that. There we go. Let's do this right here. Right. So here we did a $100,000 Roth conversion. All right, so at right here, $49,000 is the taxes. So he still has this. Let's see. Can we compare these two together? There we go. No Roth. No Roth. Oh, I don't have 69 on here. Eesh. Hold on a second. Go back and get it. Hold on a sec. All right. So what we have here is we have a no Roth conversion. We're paying $17,000 in taxes. All right. So we got. We already talked about an effective tax rate of 11%, but we know we're in the 25% tax bracket. So now we convert $100,000. Our taxes go from $17,000 to $49,000, which is an increase of $32,000. Isn't that interesting? So we've actually jumped over the 25% tax bracket and got above that. So it costs us $32,000 to convert $100,000 to a Roth. It went from $49,000 to $17,000 to $49,000. So in this case, we jumped all over the 25% into the very next tax bracket. Why would we do that when our effective tax rate is only 11%? Well, you can make an argument we should do it to avoid future tax increases, but if we look, I think this is it right here. Yeah, tax estimate. That's not so bad. I mean, even when he dies, right here, I mean, that's not much of a widow's tax trap, but they're still only in a 17 and 18% tax rate. So in this case, it doesn't make any sense to do Roth conversions, man. Why go from a 17,000 taxes to a 49,000 taxes, going completely obliterating the 25% tax bracket, going to the 33%? It doesn't make any sense at all. I mean, we don't do that, if that makes sense, because you're just giving yourself a huge tax hit. So now we got $174,000. No, we got what do we got here? $253,000 of income. Oops, we got $49,000 of taxes divided by $253,000 of income. Our effective tax rate went from 11 to 19%. A nearly doubling of the effective tax rate. That doesn't make sense. You got to understand the difference between marginal taxes and effective tax rate. And you got to understand the difference between tax brackets too. Tax brackets, marginal taxes, and effective tax rate. Marginal tax is kind of what Again, the marginal tax rate is how much you pay on your next dollar of income as tax brackets. But when you factor in other things, like in terms of how much taxes you're actually paying on your income, that's your effective tax rate. And ultimately, that's all that matters. Hope this makes sense. I know it's confusing, but you got to understand that. All right, we'll see you. Love to hear your thoughts.